Hey guys, welcome back to Smart Wallet and Me, where financial wisdom really matters. Today I'm going to give you guys a market recap and give you some headlines from the news to see what's really going on and what's causing the stock market to go down. But before we do that, I would greatly appreciate it if you guys could please like this video and subscribe to my channel. I have a goal of reaching 100 subscribers before the year end. If you guys could help me, I would greatly appreciate it. Alright guys, let's get into it. So first of all, today was a very terrible day for the stock market. This week has already been very bad. We can see that the Dow Jones Industrial lost 1.9% or 525 points, and the Nasdaq lost 330 points and 3.02%, and the S&P 500 lost almost 2.37% at 78 points. And guys, I want to read you guys some headline news of what's really going on and what's happening right now as we speak. The National Guard has been deployed at Louisville as the protests have heated up because the police officers were not indicted, and the governor of Kentucky has deployed the National Guard. So there could be a lot more protests, a lot more burnings and riots and all kinds of stuff going on over there. So that could also impact that region over there. Again, we have civil unrest going on all over this country right now, unfortunately. So that's something that we should take a look at and keep an eye on. The other thing is JP Morgan is now going to pay a $1 billion settlement over the precious metals treasury manipulation. So they have been known for manipulating the gold and silver prices for a very long time now, and it appears that they just got caught just for a little bit, and they're going to be paying a $1 billion fine. Let's see how long that's going to last and if they will continue doing it. They're trying to keep the gold and silver prices. It took a big hit lately. The next article that I want to talk about is that 80% of Americans say post-pandemic food inflation is impacting their budgets. So guys, 80% of the people are saying that food prices are going up. Inflation is making it harder for them to afford to buy food. And yet we have the Federal Reserve trying to increase inflation to 2%, but there's parts of the market that are very low inflation where items are deflated, but then there are other parts of the market where things are highly inflated, and one of those things is food, unfortunately, because the food and gas and energy are not included in the CPI index. So those things are excluded when it comes to the Fed calculating their inflation rate. So that's another thing that we need to take a look at, especially since we're going to be coming out to a second lockdown. I'm sure there's going to be more people buying up food, stocking up for the winter and the fall. So I also read that the UK is getting ready to lock down. Israel is getting ready to lock down. And other parts of the world are getting ready for a second shutdown. So that's also getting the investors into the jittery mode of trying to get away from the market right now because they know that it's going to go back down. And I'm going to do a little analysis on the Nasdaq index right now and show you guys what's really going on with the Nasdaq. So without further ado, I'm going to show you here a Fibonacci retracement going back till the March lows. And if we take a look at the March lows to the high in September 2nd, we can see that we are now at a 50% retracement level with the Fibonacci analysis tool. Actually, I would feel more comfortable if the stock market, if the Nasdaq composite would reach this level in the Fibonacci retracement level, which is close to the 9,300 range, right about around here, 9,000 range. So we still have another 1,600 points to drop, I believe, if we're gonna have another correction. As you can see that it just touched the 50% retracement level right over here around September 21, and we might have some more retracing to do to go all the way to 38.2% retracement level, and maybe even to the 0%, and that's when I think we would go back to the normal values, in my opinion. Today's RSI is around 40. The momentum is negative 1423, and the money inflow is 26, which is getting close to the oversold region, because 80 is overbought, and then below 20 would be oversold, and right now we are at 26. So I believe that we should go down a little bit below this level, and then we would be under the oversold territory, and then we will go back up. So there's still more news still coming out about the job market. Tomorrow the news is going to come out to see how many jobs were either lost or created, and if the unemployment rate still stays at 8.4% or if it goes lower. But as far as this is concerned, guys, I think that we should be heading down a little bit lower from here just for a correction and to see what we can do. But we can see that there's a lot of activity going on over here. It's been going downhill from here, from the September 2 highs, and I think that we should see a little bit more downturn from here, possibly even going to the 38.2 retracement level on the NASDAQ, which would bring us down to the 10,000 range. But I wouldn't feel comfortable until we hit close to the 9,000 range where we were around May. So guys, that's what I feel, that's what I think is going to happen, but I don't know. You guys tell me, what do you guys think? And yeah, I'll see you guys in the next video. Thanks for watching.